This is Alpha. We continue to talk about what Trump wants to do with tariff policy. A guessing game about U.S. tariff policy. Let's take the speech of U.S. Treasury Secretary Bessent in an interview with Fox Business Channel on March 18, 2025 to discuss Trump's reciprocal tariff policy. He said that this accounts for 15% of the country, but it is a large part of our trade volume. Bessent explained that the Trump administration plans to implement personalized tariffs on 15% of U.S. trading partners based on factors such as tariffs, non-tariff barriers, and currency operations against the United States. These countries include China, India, the European Union, Japan, etc. Due to their trade surpluses or unequal tariffs, these 15% of countries contribute most of the U.S. imports. For example, in 2024, Mexico accounted for 15.4%, Canada accounted for 13.6%, and China accounted for 13.9%, accounting for a total of 43% of U.S. imports. Bessent emphasized that this part of the trade volume is vital to the U.S. economy, and tariffs are intended to rebalance trade relations. He also said, each target country will be given a number, which represents the sum of our tariffs and unfair practices. We know that Bessent is not a politician, but he is a professional in finance. As the Minister of Finance, what he says cannot deviate too much from the real policy purpose. Otherwise, he is asking for trouble. This passage reflects the strategy of the Trump team to use tariffs as a bargaining lever, and also clearly classifies the target countries. If Bessent's speech is linked to Trump's statement on tariff flexibility, the implicit meaning of Trump's words will gradually become clear. Under the seemingly equal tariff policy, some countries can be more equal. The focus of the tariff policy must be in these 15% of countries. The 15% he mentioned refers to the 15% in terms of the number of countries. Kevin Hassett, director of Trump's National Economic Council, also tried to calm the market's concerns about major changes in tariff policies. He said, the market has expectations of imposing tariffs on every country, and the market needs to change their expectations because not all countries are in trade. Ishang deceived us. There are only a few countries that will face some tariffs. He said this more bluntly. Trump said all countries, Bessent said 15% of countries, and Kevin Hash said a few countries. The scope is getting more and more precise, as if they can be named directly. Speaking of this, let's take a look at the 15% of countries that Bessent mentioned, which countries account for a large part of the U.S. trade volume. The 15% of countries that Bessent mentioned. Since there is no reliable data for 2024, I used this table for 2023 on the Global Statistics Database website. This is the ranking of the largest trading partners of the United States in 2023 calculated by import value. Although it is data from 2023, it is all during Biden's term. The ranking in 2024 is similar to this, and there is no major change in the pattern. So we can use this table to see which 15% of countries Bessent mentioned. It can be clearly seen from the table that the largest trading partners of U.S. imported goods can be roughly divided into three tiers. Mexico, Canada, and China are the first tier. Germany, Japan, South Korea, and Vietnam are in the second tier. The total amount of goods imported by the United States from these 7 countries accounts for about 56% of the total amount of goods imported by the United States. Among them, Mexico's trade surplus with the United States is $139.6 billion, China's is $336.1 billion, and Canada's is $108.3 billion. By 2024, these figures will be $157.2 billion, $360.9 billion, and $102.3 billion respectively. In terms of trade surplus, other countries cannot be compared with Mexico, China, and Canada. In the episode, Trump Policy Outcome Deduction, I discussed the purpose of Trump's tariff policy. I have made some speculations, so I won't repeat them here. I will just talk about the results. I think that although Trump's tariff policy is very loud, it actually has a lot of flexibility. Its real purpose is to achieve trade balance as much as possible. members of Trump's team also helped us confirm the main targets of the tariff policy. Next, assuming that the purpose of the tariff policy is trade balance, we try to make a rough estimate through the data in 2023. Assuming that the United States has increased tariffs, but the trade volume and other factors have not changed much. Roughly estimate how high the tariff rate needs to be adjusted to offset this part of the trade deficit from the tariff, so as to achieve trade balance. We can get this table. It needs to be explained again that this table does not take into account the impact of the increasing U.S. tariffs on bilateral trade volume and other factors. We can only make an estimate of the tariff rate for trade balance in a general direction. We can see from the table that as soon as Trump came to power, he focused on the three trading countries in the first tier of trade, Mexico, Canada and China, and launched tariff attacks of roughly the same magnitude. But the tariff bases of these three countries were different before. After the tax increase in Trump's first term, the average tariff on Chinese goods has reached about 20%, while Mexico and Canada are almost zero. Except for some commodities, the figures have become 40%, 25%, and 25%, respectively, with China being the highest. And Trump has also issued tariff threats about challenging the US dollar and buying Venezuelan oil. Who is he threatening? It is self-evident. The data also shows that the current tariff levels of Mexico and Canada are actually very close to the tariff target. Basically, the purpose of trade balance can be achieved. The reciprocal tariff policy gives Mexico and Canada a break, which also confirms the speculation that the United States implements tariffs with the goal of trade balance. The tariff rate on China seems to have to be further increased in order to achieve trade balance. Recalling that Trump claimed during the campaign that he would raise tariffs on China to 60%. This figure does look very close to the target rate of 60%. As for the four countries in the second tier, Germany, Japan, South Korea, and Vietnam, Trump has not yet launched a separate tariff attack on these countries as a country, but has only implemented high tariffs in certain industries, such as automobiles and steel. Another very special country is Vietnam, whose trade surplus accounts for more than 80% of exports. In 2024, the surplus will further increase to $123 billion. It ranks fourth after China, Mexico, and the European Union. This is mainly due to the fact that the United States has geopolitical considerations or Vietnam has actively reduced tariffs on American goods, as well as the diversification of supply chains. The United States did not focus on attacking Vietnam, but with the full implementation of the reciprocal tariff policy on April 2, Vietnam will inevitably suffer high tariff pressure, and the implementation also proves this point. It can be seen that the introduction of reciprocal tariffs can greatly ease the pressure on Germany. So the United States seems to be closer to the goal of trade balance. If trade balance is used as the goal of tariffs, we can see that the reciprocal tariff policy on April 2 will be the climax of the whole piece of music. The third movement of the Tariff Symphony, conducted by Trump, has been played, and the final chapter of the Tariff Symphony is not far away. But at present, we have not seen any signs of the dust settling on the tariff policy, and Trump has not yet revealed the trump card of the tariff policy. Trump's unpredictable behavior allows him to make full use of the negotiation skills of extreme pressure. However, this has also caused the financial market to continue to fluctuate widely, affecting the emotions of traders and the confidence of American consumers. When will Trump's tariff policy be determined? Let's think about it rationally first. On the one hand, since tariffs are a tool for extreme pressure, there is room for flexibility in tariffs. The current unresolved tariff status is not what the Trump administration wants, because this status has a great negative impact on the confidence of American consumers and industrial investment decisions. As long as the tariff policy is not implemented, it will hinder the progress of the industry returning to the United States. How can this make the United States great again? Trump will not be able to distinguish between means and ends. If you want to stabilize market confidence and let capital make the decision to invest in the United States, the tariff policy cannot be floating like this. The sooner it is implemented, the better. Through the analysis of U.S. trade data and consideration of social reality, I think the United States' wavering tariff policy it won't last long. So, as an investor, how should we view the negative impact of this tariff policy? From the perspective of market sentiment, we know that the market is not afraid of certain negative impact, but of endless uncertain bad news. Once the tariff policy is implemented smoothly, the market will quickly price in whether it rises or falls. Investor sentiment will gradually stabilize. Just as the Federal Reserve believes, the impact of a certain tariff policy may be one-off, not continuous. From the perspective of funds, regarding the inflation, consumer confidence and changes in unemployment caused by tariffs, it is difficult for the Federal Reserve to raise interest rates again, or tighten liquidity. There is still sufficient funds in the market. Will global investors lose confidence in the U.S. debt dollar due to the turmoil of U.S. policies? I think this sentiment may happen to some investors temporarily, but it will not last long, unless the United States is completely ruined by Trump. Because it all depends on the support of peers. After all, except for the United States, there is no other place on the earth that is relatively safe and can accommodate a large amount of investors' funds. Based on the above two considerations, I think that although the overall direction of the U.S. stock market this year is negative, we should not have overly pessimistic expectations. The deeper the fall, the stronger the rebound will be. After all, there is no better place for so much money. From the above conclusion, we have a general understanding of the background and motivation of the Trump administration's tariff policy. However, the materials cited above are very limited, which is suspected of being taken out of context, much like shooting arrows first and then drawing targets. In order to think about tariff issues from more dimensions, in the next issue, we will sort out all aspects of Trump's tariff policy since his first term. Let us have a relatively comprehensive understanding of the development path of tariff policy. Well, let's stop here. We will continue in the next issue.